You ever see something from the financial world that just doesn't add up? You know, a piece of data that seems to be screaming one thing while everything else is pointing in the complete opposite direction? Well, today, we're going to dig into one of those confusing signals to see what kind of bigger picture it's really showing us. Let's get into it. It all kicks off with this, just two simple words. But in the world of stocks, man, that is an alarm bell. This is not a gentle suggestion. It's not a maybe think about selling. No, this is a loud, clear, data-driven warning. And look, this isn't just one person's opinion or some hot take. This signal for a company with the ticker ARNA comes from a platform that's all about crunching the numbers. It's looking at stuff like moving averages and other technical indicators, which is basically a fancy way of saying it's looking for patterns in the stock's price and how much is being traded. And its conclusion? It's totally unanimous and, frankly, pretty stark. And that right there is the question that gets our whole investigation started. Is this company really in some kind of deep trouble? Or is this signal only telling us one little part of a much bigger, more interesting story? To figure that out, we've got to look past the ticker symbol. So let's pull back the curtain on ARNA. I mean, before it was a stock signal, it was, and still is, a real business. You know, with buildings, employees, actual products. So who exactly are they? To put it simply, ARNA is a huge player in the Indonesian ceramic tile game. They make the tiles that go into houses and buildings all across the country, a very real, very tangible business. And they're not new to this either. They got their start with distribution way back in the mid-90s, then jumped into manufacturing pretty quickly after that. They went public on the stock exchange back in 2001 and have just been growing their operations ever since. So yeah, this is not some flash-in-the-pan startup. It's a really established company. Their business model is actually pretty straightforward. They've got a bunch of smaller companies that do the manufacturing and another one that's in charge of getting those tiles out to the customers. And their focus is almost completely on their home turf, the Indonesian market. So far, everything seems pretty solid, right? All right, so we know who they are. The next logical step in any investigation like this, you got to follow the money. So let's take a look at their financial performance, and we're going straight to the source, their official annual reports. Do the numbers tell a story of a company that's in trouble? Okay, now this is where the plot thickens. The numbers tell a really surprising story. If you look at 2021 versus 2022, net sales are up, which is good, but check out the gross profit. It didn't just go up, it jumped from 919 billion to over 1 trillion rupiah. This is the exact opposite of what you'd expect to see from a company with a strong sell signal. And when you see it as a chart, wow, that story gets even clearer. That's a seriously healthy increase. It shows the company is getting way more profitable on the stuff it sells. Just to let the sheer scale of this sink in, that's their gross profit for 2022, over 1 trillion rupiah. I mean, this is a substantial, highly profitable operation. This is the financial reality of the company we're talking about. And here we are, right back at the heart of our mystery. We've got a company with a solid history, a clear business, and profits that are growing nicely. And yet, we've got a computer algorithm that's looking at its stock chart and just screaming strong sell. So how can both of these things be true at the exact same time? Okay, but to be fair, no business is without its challenges. Before we totally solve this puzzle, let's see what risks the company itself flags in its own reports. You know, what kind of stuff keeps their management team up at night? Anya, here they are. The prices of their raw materials could change. The value of different currencies can move around, which affects how much they pay for things. There's a risk customers might not pay on time. Interest rates could go up. Look, these are all pretty standard business risks that any company that's well run is watching and managing. They're important, for sure, but they don't seem to explain the crazy urgency of a strong sell signal.
So here's the thing. The answer to our mystery, it isn't hiding in just one set of data. It's all about understanding that there are two totally different ways to look at a company, and they often have two very different goals.
This is the key to the whole thing. On one side, you've got what's called technical analysis. It only cares about the stock price and how much is being traded. It uses charts to ask one simple question: where is the price going next? It's all about the short term. On the other side, you've got fundamental analysis. This focuses on the business itself, its health, its value, its financials, to ask a different question. What is this business actually worth? It's a long-term game. So remember that strong sell signal from the beginning? That, right there, was pure technical analysis. It wasn't making a judgment on how good Arwana's tile business is. It was just an automated conclusion based on recent price patterns, basically suggesting the stock price might drop in the near future. And all that digging we did, looking into the company's history, its business model, those growing profits, even its risks, well, that's what we call fundamental analysis. We were trying to figure out the real value and health of the business itself, no matter what its stock price was doing on any given day. So after solving this whole puzzle, what did we actually learn? That conflict we saw? It wasn't a mistake. It was just a difference in perspective. Let's break down that final understanding. Here's the breakdown. First off, a technical signal like strong sell is all about short-term price momentum. It's not a final verdict on the company. Second, the fundamental stuff we looked at, the sales, the profits, that tells a story about the long-term health of the business. And third, and this is the big one, these two approaches are just not trying to do the same thing. One is for a trader, and the other is for an investor. Which leaves us with a final question to chew on. When you look at a company, what do you see? Do you see the flickering moment-to-moment line of its stock price? Or do you see the deeper story that's being told in its balance sheets, its products, and its place in the world? The answer, really, it reveals not just what the company is, but what kind of analyst you are.